Okay, so welcome back to another video, and as I'm sure you saw from the clickbaity title, yes, I am selling a lot of my real estate, and today we're going to get into why I'm selling, my next steps in terms of investing, whether it's in real estate or not. Spoiler, it is. And where I think the market in general, both in Canada and Winnipeg, is kind of heading over the next long period of time. We're talking 10, 20 years. So let's get into it. So for those of you that don't know me, my name is Cody. I'm a realtor and investor here in Winnipeg, Manitoba, Canada. And so in order for you to understand why I'm starting to sell off some of my investment portfolio, I think it's important to understand how I got into real estate investing. And so a few years ago, I got into real estate investing, and I actually started with the BRRRR method. Now, my first property was not a BRRRR property because I didn't know anything about real estate investing. I just bought it and then kind of figured it out as we went on. But after that, I started to buy other properties with the intention of renovating them, getting some renovations done, and then refinancing and renting them out. And I did that a couple of times and it worked out great. Obviously, not every time did I get 100% return on my money. So I had a lot of this money invested, and the market has taken a turn where a lot of my prices on my properties have increased. And so it was a good time to cash out. And so I started to sell my properties. So in a way, I kind of maxed out my value in those assets, and I'm trying to take my value from those assets and put it into something else. And so for those of you math nerds, that's called return on equity, which is the return of the money you're getting based on how much of the property you own. Now, how much you own is a little subjective because it depends on the market value minus your total mortgage on the property. And your mortgage goes down over time and the market value goes up. So your return on equity usually gets worse the longer you hold an investment. You'll be getting the most cash flow based on the amount you own at the beginning of your investment. And so because of that, my return on equity got to a point where I feel like I could use the money and put it into a different investment vehicle and get a better return. And so that is actually what I'm starting to do. And then you couple that with the fact that when you BRRRR properties, and this is something not a lot of people talk about in the real estate investment world, when you BRRRR properties, you actually are maxing out the amount of debt you can have on that property. And usually the rents aren't fantastic, so that your cash flow actually really suffers. And so sometimes you'll see that a BRRRR might have a return on investment that's like 10%, which is a pretty good return. But the 10% return is only on $10,000 left in the deal. And so it's not a lot of total capital that's left invested because you had a good return through your refinance. But to get that 10 grand back through cash flow is going to take a long time, in this case, 10 years. And so this is where calculating your return on equity is a really good tool to figure out how much you can leverage your money. And so when your return on equity is getting down into the 2%, it actually becomes a point where you're actually not getting a good return on the money you have in that property. You're better off to sell it and even put it into something that's not real estate. You can get a GIC or buy treasury bonds at around 4.5%, 5% right now. And so that's better than your return on equity you're getting in the money you have left in the property. Now, obviously, like I've said so many times on this channel before, there's other benefits of owning real estate, and I'm not discounting that. I'm just saying, in my case, I'm going to take real estate that had performed well and is still technically performing well, but I'm going to take that and leverage it into better performing assets. And so for me personally, I'm starting to get into the small multifamily space. There are some opportunities here in Winnipeg where if you want to get into small multifamily, there's a couple of places that can work. Now, for my personal investment portfolio, it's going to be different than what you want to do. But the reasons I'm starting to get into multifamily is because I wanted to consolidate my investments into one building, which is atypical from an investment point of view because usually you want to diversify, but I'll get into that a little bit more later. B, I wanted to take all my because I self-manage my properties, I wanted to take all my different effort and work I'm putting into all these different places and combine it all into one building. Ideally, it'll make enough money that I can hire the property management out and never have to touch a finger at that property. Okay, and then the third reason is that I'm actually okay with more risk. And this goes back to the point of putting all my eggs in one basket, is that Canada right now has loan programs that actually subsidize those who want to get into small multifamily. So if you're interested, reach out. I can walk you through how that works, both in Winnipeg and in other cities here in Canada. The reason they do this is because it's becoming more and more challenging to buy these buildings that have a really high cap rate, and it's really not affordable. Plus, the country wants to keep rents lower, and so to do this, they subsidize the landlords by allowing them beneficial loan programs. Okay, and so if you're a smart person, you're probably wondering, why are you selling now? Like, what about this current time period, or what about the market is making you want to sell and move into multifamily? And that's a great question. Very prudent of you to ask that. And so essentially, where I think the market is heading, we'll talk about it macroeconomics, and then we'll get into the micro of Winnipeg. But from a macro scale in Canada, it's clear that housing is becoming more unaffordable, and we have to become more and more creative in terms of how we're finding houses, how we're allowing people to afford them. What I think coming down the pipe is probably going to be a 35 or 40 year amortization period for houses, specifically probably for owner-occupied homes compared to investment properties. And that will open up the market a little bit. But obviously, I think over the long term, we're looking at something more similar to Europe, where we're going to see a lot more attached homes, a lot more row homes, townhouses, and we're already starting to see some of that. But I think a majority of them are going to be becoming that because we're going to need a higher density based on land value. The problem with all of real estate right now is that land value continues to go up and construction costs continue to go up. So developing new homes is very hard. And there's a lot of red tape involved around it from the government in terms of taxes and permitting. Most of that is well intended and put to good use. But the problem comes when your land value starts to go high. It's not worth it to build these smaller homes anymore. And so as we build these more and more expensive homes, they become less affordable for regular people who are trying to buy their first home or their second home, or maybe their dream home or their last home, as people call it, where they move into this home and then don't move again. Okay, and so what does that mean for you or me as a buyer or an investor in specific markets in Canada? Well, we've seen in really big cities like Toronto, Vancouver, that it's become kind of absurd. And if you're a first-time home buyer, chances are you're probably buying a condo, which kind of sucks, or you're buying something that's 2 hours away from where you work, which also kind of sucks. Here in Winnipeg, we're not quite there yet, and we do have the luxury of having space available. And so I do think we're going to continue to expand in new developments, building more homes, but we are still going to target wealthy immigrants moving to Canada. Okay, and that has always been, not always, but a lot of the demographic of people buying these new construction homes in Winnipeg has been these immigrants who are coming over, who are doctors, lawyers, engineers, nurses, whatever, well-educated people that have established careers that can actually afford to buy these places, and which is great. The problem is we're running out of places to house the people that are born here, and even those immigrants' kids who don't have the same access to the funds they made in other countries. Now, I don't want to get into politics around why they don't have access to the funds, even though their parents did when they moved here. We're not getting into economic policy here for Canada. But in terms of the market in Winnipeg, what I think is going to happen is we're going to continue to see the prices of resale homes continue to rise. And I don't think the interest rates will come down much lower than where they are now. A couple more points or half points are expected in the future, but we're not going to see low twos barring any sort of economic total failure that could arise from whatever unforeseen event. But if we don't have another global pandemic or something similar, then the interest rates will probably stay somewhere in the 3 to 4 range long term. And we're going to continue to see a lot of people stop moving. And so what does that mean? We're going to see more people start renovating. And this is already something we're seeing happening with contractors who are charging more money because now we have a lack of contractors. There's not as many plumbers or electricians or honestly framers, roofers. We're missing a lot of those core industry partners because that's where people are putting the money on now because it's more expensive to buy a new place and it's just to renovate your current place. So then what does that mean for the city? Well, the city needs to reevaluate their permitting process. They need to reevaluate the zoning process. And we actually are in the start of this. And so all of this suggests that we are moving towards a higher density of living, which means the value of land is going to go up even more over time. And so while there's no great sense of urgency on buying a place, I do think that owning real estate is still going to be a favorable bet over such a long period of time. because land is still going to hold its value. Okay, and so because of that, I'm going to be buying big plots of lands with big buildings on them. And as more and more people move here, I want to have buildings that can house those new people in those higher density living buildings. So, i.e. multifamily buildings. And so that's why I'm getting into the multifamily buildings here in Winnipeg. Okay, and there's actually opportunity for you if you want to as well. And so reach out to me. Let's see if it's right for you, or if you want to stick to single family, because there still are lots of opportunities in the single family marketplace. That's it for today. I will see you all next week.